Hello and welcome. Today, we're taking a snapshot of India's super fast-moving world of banking and finance. We're going to connect some dots that might not seem related at first, but trust me, they paint one very clear picture.
Right, what could these three things possibly have in common? Well, they are all key pieces of a massive transformation that's happening as we speak. We're going to put these puzzle pieces together and show you what the whole picture looks like.
So let's start with a really big number. $702 billion. That is the staggering size of India's foreign exchange reserves. Think of it like a giant financial shield for the entire economy, protecting it from shocks happening around the world. And while the country is building up that massive shield on a global scale, this number shows you the revolution that's happening right in our pockets. Almost 120 million UPI transactions in a single month. That's the incredible speed of change we're talking about. So let's break down what this all really means. First up, let's do a quick health check on the economy. We're going to look at the key vital signs, the numbers that the Reserve Bank of India keeps a close eye on to make sure the whole system stays stable and healthy. Okay, this table might look like just a bunch of numbers, but think of these as the main control levers for the economy. The one to really focus on here is the policy repo rate sitting steady at 5.50%. By keeping that rate firm, the RBI is basically sending a clear signal. Its number one job right now is to keep inflation in check. So that huge $702 billion reserve we mentioned, what's it actually made of? This chart breaks it all down for us. You can see the lion's share is in foreign currency assets, followed by a very solid chunk of gold. Together, these two form the powerful backbone of India's financial security blanket. All right, next up, let's look at how the system is dealing with one of its biggest, oldest challenges, the problem of bad loans. There's a huge effort going on right now to really clean up the bank's books, and we're going to see how. So before we dig in, we need to be on the same page with this term, NPA, or non-performing asset. In simple terms, it's just a bad loan, a loan that has stopped making money for the bank because the borrower isn't paying it back on time. Getting these off the books is priority number one for a healthy bank. And banks are definitely on the attack. As the RBI itself points out, write-offs have been a major strategy. Now, this doesn't mean the debt just disappears. It means the bank takes the bad loan off its main balance sheet to look healthier, but it is still going after that money, doing things like auctioning off assets to get it back. Now, this slide shows you just how messy that cleanup can get. In this case with IndusInd Bank, using two different accounting methods created a massive discrepancy of 2,600 crore rupees. On one hand, they were hiding losses by spreading them out over time. On the other, the standard method showed the true risk right away. This is exactly why strong rules and transparency are so important. Okay, now for the really exciting part. The technology explosion that is completely changing how you and I use money every single day. I mean, just look at this growth. It is absolutely off the charts, from just under 39 million transactions in January to nearly 120 million by September. This just perfectly captures the unstoppable rise of UPI. It's become the backbone of India's digital economy, no question about it. And it's not just about the sheer number of payments. The tech itself is getting way smarter. Features like facial recognition are already being rolled out. Pretty soon, you might not even need a PIN anymore. You'll just look at your phone and boom, payment done. It's all about making it easier and more secure. But here's where it gets really interesting. A real puzzle. For all this talk about a digital revolution, check this out. Cash still makes up half of all consumer spending. It's a powerful reminder that even with all this incredible tech, old habits die hard. And the innovation is not slowing down, not for a second. The next frontier is already here. Big names like Razorpay, NPCI, and even OpenAI are testing ways to let you pay directly inside an AI chat. Just imagine talking to a chatbot to buy something and finishing the payment right there in the conversation. That's where we're headed. So, with all this wild, fast-paced change, who's making sure the whole thing doesn't go off the rails? Well, that's where the Reserve Bank of India comes in. They're the referees, and they're busy rewriting the rulebook for this whole new game. This slide shows a massive shift in how banks are being told to think about risk. The old way was reactive. A loan went bad, then you'd set money aside. The new way is proactive. Banks have to look ahead and prepare for losses that might happen in the future. It's literally the difference between buying an umbrella when it's already pouring versus saving up for a rainy day. And it's not just one big rule change. The RBI is making a whole bunch of moves at once. They're making it easier for big corporate mergers to happen. They're making it easier for banks to sell off their bad loans. And at the same time, they're tightening the screws on the whole buy now, pay later industry to protect you, the consumer. So we've talked big picture economics, we've talked incredible tech, and we've talked about the new rules of the game. All of this really brings us to the most important question of all.
Exactly. How does all this high-level stuff actually impact you and me and the money in our bank accounts? Because it absolutely does. Let's connect these final dots right now.
First, something small you might have already noticed in your bank statement. Taking cash out of an ATM after you've used up your free transactions, it's going to cost you a bit more. It's a small direct cost and maybe a little nudge to use those digital payments we talked about. But on the flip side, and this is a really big deal for you, check out this number, 30 lakh rupees. That is the new, much higher amount of compensation you can get from the banking ombudsman if a bank messes up and you lose money because of it. Your protection as a customer just got a lot stronger.
And all this innovation is putting some pretty cool new tools right into your hands. You can now use your credit card reward points to pay for things through UPI. Your local shopkeeper has better devices to take your payment. And behind the scenes, banks are funding more green energy projects, while massive campaigns are trying to return lakhs of crores in forgotten money to people just like you.
So when you put it all together, the entire financial world is getting faster, way smarter, and even a little bit greener. And that brings us to the final thought I want to leave you with. The landscape is changing at lightning speed, so it's probably worth asking yourself, is your bank keeping up?